Hi, this is Elliot Eisenberg of Graphs and Laughs here to catch you up to date on the latest in residential sales data. In Hillsborough County, single-fam home prices went up 7.6%, the best for all single-fam properties in all three counties. And multi-fam prices went up a stronger 9.9%, the strongest in all three counties for both types of properties. Sales activity unsurprisingly declined. It fell 13.7 for single fam and 10.1 for multifam. Sale price as a function of list price went up for both single and multifamily to 96.8 for single fam and for 96% on multifam. Pending activity also unsurprisingly declined. There's not a lot of inventory out there. It fell 9.9 for single fam and 5% for multifam. Lastly, active inventories fell 6.4% for single fam and went up a strong 21.2% for multifam, and multifam inventories across all three counties increased substantially. In Pasco County, single-fam home prices went up almost 5%, and multi-fam prices declined by 0.6%, very small amount. Sales activity declined 4.8% on single-fam properties, and that was the best for single-fam performance across all three counties, whereas multi-fam sales activity increased a strong 7.9%, the best number for all three counties from both types of properties. Sales price to list price increased for both single and multi to 98 for single fam and 98.3 for multi-fam. Pending sales activity declined 15.6. Again, not a lot of inventory. But multi-fam increased 14%, the best across all three counties for both single and multi-family. Single-fam inventories increased 7.9%, whereas multi-fam inventories increased 38.6%. But remember, multi-fam inventories increased substantially in all three counties. In Pinellas County, single-fam home prices fell a very tiny 0.2%, and multi-fam prices fell 3.2%. If we turn our attention to sales activity, it declined 7.4% for single-fam and a little more, 12.8% on multi-fam. Sales price as a function of list price increased to 95.6% on single-fam, but declined to 93.9% on multi-fam. Pending sales increased on the single-fam side by 6.5%, the strongest single-fam increase across all three counties, and they fell 9.7% for multifam. Lastly, on active inventories in Pinellas County, they rose 16%, the strongest single-fam increase across all three counties, and they increased 63.3% for multifam, the largest across all three counties for both types of properties. But remember, multifam inventories increased substantially across all three counties. Turning our attention to the national market, GDP in Q3 came in at a shockingly strong 4.9%. However, GDP in Q4, which ended about a month ago, is going to come in at about 2%, the same as it was in Q1 and in Q2. Q3 was just a one-off quarter. Just as the first half of 22, which is now a while ago, we had negative GDP growth for 2 quarters in a row, didn't signify anything particularly significant, just weird one-off stuff. There was no recession going on. Similarly, the Q3 number of 4.9 that was terrific was just a nice number, but it's not suggestive of much of anything. That said, inflationary pressures continue to decline. We see unemployment going up, which is pushing downward pressure on wages, which are coming down. Oil prices are coming down. Natural gas prices are coming down. Rent prices are falling. Most commodity prices are coming down as well. So we see inflation coming down. That said, the market's gotten ahead of itself. Just as the market got ahead of itself in September and October, when the market was very pessimistic and drove interest rates high, which caused mortgage rates to hit almost 8%, suddenly in November and December, markets got downright giddy, seeing inflation collapsing and the Fed going to lower rates quickly and a lot and soon and all that great stuff. And the Fed said, wait, the Fed's been saying for the last several weeks, no, we're going to keep interest rates higher for longer. We're not sure when we're going to cut them, but they're not going to happen. It's not going to happen in March. It'll happen in June, most likely, maybe if we're lucky in May, but it's certainly not going to happen in March. So we got ahead of ourselves, and the Fed's telling us, no, we're going to keep rates higher for longer. Historically, from the last rate hike, which occurred in the end of July, until the first rate cuts, about 9-10 months. So if they start cutting rates in May, June, that's the historical normal duration between the last peak and the first cut. However, the longer they keep rates up at this higher level, the more I fear a recession is likely to happen. That said, because realtors and realty and property has been in a recession already, the likelihood of this potential light and mild recession impacting the realty markets and the realtors in any negative way is almost zero. On the contrary, interest rates will fall and activity will increase and sales will rise as a result. So don't think that any future recession will have a negative impact on realtors and realty. It will not. I hope this has been helpful, and I look forward to seeing you next month.